Morning, Steve in Chicago with the morning grain comments. Well, last night we had a pretty good storm here in the Chicago area, losing power. Then we're getting ready for tomorrow's USDA version of a storm. Overnight, we've got soybean prices higher, soybean oil higher, corn higher, with wheat a little bit lower. Yesterday, it seemed like all at the same time, energy, stocks, and commodity prices rallied just before the Senate passed the infrastructure bill. And so we'll watch and see if there's any follow through buying because of that. Soybean oil is up. Palm oil month-end stocks were down, and this is a change for the last 5 months, and unexpectedly dropped, which has rallied palm oil sharply and helping soybean oil rally. I think that rally in soybean oil is also helping the beans. I think the fact China is back buying some U.S. beans is supportive, and I think the market is kind of gearing up for what the USDA might say tomorrow as far as drop in U.S. Soybean crop. The problem is the demand could also decline in the old crop, both crush and exports, and the carryout could actually increase from the 135 USDA is using. Over in the corn, the trade's waiting to see if USDA drops the corn crop, drops the Brazil corn production, and raises U.S. corn exports to drop the 21-22 corn carrot closer to 1,200 than the 1432 number they're using. And in the wheat market, could be some profit taking from wheat corn spreading that we've seen the last couple of days. Still, the Matif and Black Sea wheat futures made new contract highs yesterday because of concern of the late harvest in Europe, some of the quality problems in Europe, and the fact that combined Russia, Canada, and U.S. wheat crop could be down 20 million metric tons. They may not say that in tomorrow's report, but eventually that's what we're talking about as far as losses. U.S. FOB wheat prices are still a premium to most exporters, but I think the fact that you're going to have this lower world wheat exporter stocks to usage ratio is supportive to the wheat prices. Again, pretty strong barriers just above where we are at in D's corn. We've got to push through that for some strong fundamental reasons. And at 580, we probably could see some increase in farmer selling, especially east of the Mississippi where they're talking about record yields. And in the bean market, we're also up against some pretty strong resistance, building up because of the lower crush, a lower export pace, and the fact that we have some pretty good crop conditions east of the Mississippi. And the August soybean contract went up for the 5th straight day and is at 5-month highs going to expiration on Friday. Weather-wise, the Western Corn Belt will be dry for the next 10 days, but the maps do show some rain day 11 through 14 in the Western Midwest. But again, we're not sure if that's being influenced by the tropical storm that will move into Florida later. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. Remember, always treat people like you yourself would like to be treated.